Hey friends, tax season is coming. I've got you covered with a 12-episode Saturday series running January through April. Each week, I'll share tips to help small business owners avoid tax season stress, get clarity, and lighten the load by delegating what you don't need to carry. Tune in every Saturday and step into tax season with confidence. There's an invisible ceiling in small businesses, and it sits right around the $200,000 mark in annual revenue. I see it every single day in my work with entrepreneurs, business owners who hit that number and just stay there. Year after year, same revenue, same stress level, same chaotic tax season every April. And here's what's frustrating. They're working harder than ever, longer hours, more stress, less family time, but that revenue needle barely moves. Maybe they go from $195,000 a year to $210,000 a year, but essentially it's flat. It's like running on a treadmill that keeps speeding up while you're getting more exhausted, but not actually going anywhere. Then tax season hits, and it's the same nightmare on repeat. Scrambling for receipts, wondering what can you actually deduct, handling your CPA a shoebox of chaos, and hoping they can make sense of it. And ultimately writing a check that feels way too big because you know deep down, you do know, you're leaving money on the table with some missed deductions. Let me paint a picture and tell me if this sounds painfully familiar. You're making decent money, maybe $150,000, maybe right at the $200,000 mark, but something feels fundamentally off. You're working 60, 70, sometimes 80 hours a week. You're the first one on the work in the morning, the last one to stop at night. You answer emails on Sundays, handle customer service during dinner, do proposals at midnight. And despite all that sacrifice, your revenue is basically flat. Maybe it's up 5% from last year, if you're lucky, but 5% revenue growth when you're working 50% more hours, that math doesn't math really. Then tax season arrives and everything gets worse. You spend weeks trying to reconstruct your year because your books are not in order. Did you categorize that equipment purchase correctly? Which meals were actually business meals and which ones were just lunch? What about your home office? Can you deduct it or not? You're not sure, so you either don't claim it, leaving money on the table, or you claim it nervously, hoping you won't get audited. Your CPA bills you for extra hours because your records are not organized. They're doing cleanup work that you should have done throughout the year, and even with their help, you know you're missing deductions. That conference you attended, did you track all the deductible expenses? Those software subscriptions scattered across the 3 different credit cards, are they all properly documented? Probably not. The result, you're stuck at the same revenue and overpaying on taxes. Business owners in this situation typically overpay by $5,000 to even $15,000 more annually in missed deductions alone. That money could have been reinvested in growth or simply kept in your pocket. Instead, it goes to the IRS because your books weren't organized well enough to capture it. So here's the real problem behind both issues, the revenue ceiling and the tax overpayment. You have no financial visibility, you're running your business blind, and when tax season arrives, you're paying the price. Like, literally. You're managing your business by checking your balance. Can I afford this equipment? But that's not how tax-smart business decisions get made. When you buy equipment, there are tax implications, depreciation, deductions, timing considerations, but you can't take advantage of those tax strategies if you're just looking at your checking account balance. Without knowing your true cost by category, you can't price properly, which means you're earning less than you should, but it also means you cannot track deductible expenses properly. Every dollar you spend on legitimate business expenses should reduce your taxable income, but only if it's properly categorized. Undocumented. When your books are a mess, you'll lose track of these deductions. So what does it actually take to break through the $200,000 ceiling? It comes down to three fundamental elements that work together to create both business growth and tax optimization. Element number one, know your numbers monthly, not just at tax time. Most business owners only look at their full financial picture once a year when their CPA needs information. And that's way too late. You need monthly clarity. What you made, what you spent, what's deductible, and what your profit margin actually is. This month visibility lets you make strategic decisions all year long and ensures nothing falls through the cracks at tax time. Element two, organize for deductions, not just for compliance. There's a massive difference between bookkeeping that barely satisfies the IRS and bookkeeping that strategically captures every possible tax advantage. When you properly categorize expenses as you go, track mileage in real time, document business purposes, and maintain clean records, you're not just staying compliant, you're building a tax reduction machine. Element three, build systems that serve both growth and tax strategy. The same systems that help you scale your business also makes tax preparation painless. When you have systems for tracking income accurately, categorizing expenses properly, by tax category, maintaining documentation, and generating reports for your CPA that actually wants to see, you're simultaneously positioning yourself for growth and tax savings. Here's what this looks like in practice. The Clarity Compass Method membership meets every Monday night at 7 p.m. specifically to build these systems. We're not just learning bookkeeping for bookkeeping's sake. We're organizing your financial records in ways that directly reduce your tax burden while giving you the visibility to make growth decisions. You're learning along those other business owners who are tired of both revenue ceiling and having to deal with tax stress. So let me give you the bridge strategy, the path from where you are now to where you want to be. Step number one, get current and organized before next tax season. This is crucial. And if your books are behind, if expenses aren't categorized properly, if receipts are scattered, you need to fix them now, not in March when you're panicking. It's every week you delay is another week of potentially deductions slipping away untracked. This is exactly what we tackle in Clarity Compass Method sessions. Every Monday night, we work through your books together, not just entering transactions, but categorizing them correctly for maximizing tax benefit, learning which expenses go in which category, understanding what documentation you need to support deductions, building the habits that make the tax season smooth instead of chaotic. We work through real scenarios specific to your industry. If you're a contractor, we focus on equipment depreciation, vehicle expenses, and material tracking. If you're a consultant, we optimize home office deductions, travel expenses, and professional development. The tax strategy that works for one business type doesn't necessarily work for another, so we make it specific to your situation. Then, this is the beautiful part. Once you understand how to organize for both growth and taxes, you can graduate to our white glove services. We take over completely. We handle the weekly bookkeeping services for you. We can ensure that everything's categorized correctly for tax purposes, track your deductions and your mileage, maintain documentation, and keep you audit ready year-round. Your CPA will 100% thank you. And more importantly, your tax bill will be thousands less because you're capturing every legitimate deduction throughout the year. But whether if you're doing it yourself through the membership or if you're delegating it out through the white glove services, the key is this: you need systems in place now, not in March when tax season arrives. So let me map out what this journey looks like month by month, especially as we move through tax season. In the first 3 months, we work on cleaning up and getting you with current organization. If you join us now, we'll focus on getting you ready for the year's tax filings. We're cleaning up last year's records, properly categorizing everything, finding those missed deductions before you file. During Monday night sessions, you're asking questions like, can I deduct this software subscription I used partially for my business? Or you may ask, how do I document this meal with a client? Or what's the rule on home office deductions for my situation? By the end of the third month, which takes you right about tax season, you'll have something invaluable. Organized records that tell you the complete story of your deductible expenses instead of you scrambling and guessing. And then you'll be able to hand your CPA clean, categorized books. Your tax prep bill will be lower because they're not having to pay them to clean them up for you. And more importantly, your actual tax bill will be lower because you have captured all the deductions and you haven't missed them. So between the fourth month and the sixth month inside of the membership, we really try to start thinking about your strategic positioning for the upcoming year. Now you have done your taxes, you understand how to do the filings, and we're building systems that prevent it from ever being chaotic again. You're learning to categorize expenses correctly as they happen. You're using tools to track mileage automatically. You're documenting business purposes in real time instead of trying to remember months later. Every week in our Monday sessions, you're building habits that both grow your business and reduce next year's taxes. You're also making better pricing decisions based on real numbers, which means higher revenue. And you're cutting expenses that aren't serving you, which means better margins, both directly improve your bottom line. That $200,000 ceiling and those painful tax seasons are connected. They're both symptoms of the same problem, lack of financial organization. And here's the thing about tax season. It's not just about compliance and filing, it's about keeping more of the money you work so hard to earn. Right now, if your books aren't currently and properly organized, you're losing money. You're missing deductions. You're paying more than you should. And next tax season will be just as stressful as the last one unless something changes. The difference between business owners who stay stuck and those who break through isn't just about revenue growth. It's about having systems that support both growth and tax optimization. It's about monthly clarity instead of annual scrambling. It's about building a business that's financially visible and strategically positioned, not just for the next tax season, but for sustainable long-term success. Join us on Monday night or schedule a call and let's talk about our white glove services. Let's break the ceiling and fix those tax seasons together. Because a year from now, you'll either be in the same place, same revenue, same tax stress, or you'll be looking back amazed at how much has changed once you finally got financially organized and you can see your tax smart systems that are working for you. The choice is yours. The time is now. Thanks for tuning into the Tax Season Saturday series, and I'll see you on the next episode. Hey, thanks for joining this Saturday's tax season special. Don't forget, you can join the Clarity Compass membership for weekly support or reach out for our white glove bookkeeping services. And remember, we're not lawyers or accountants, just your guide to clarity. Catch the next Saturday episode in this special tax season series. See you then.